Oh, Lord, look at that. Let me explain what you're about to see on the screen. Save this video and like and follow for more. What you're seeing is the S&P 500 and a bunch of securities for the first 10 months of the year, rather, 10 months of the year, and how they're performing. Now, I'll tell you what's interesting about what you can see on screen. First of all, the S&P 500 is not 500 securities that move it, in actual fact. The ones that move it are the big ones in the big circles because it's market capitalization weighted. So healthily for this economy, there is 40% of companies are below the 0% line. There's 40% of the companies in the S&P 500 which haven't risen. So the market is discerning. In a bubble, they'd all be up. Okay. Also, yes, it is indeed concentrated. If you do not happen to hold the the 2Ms, the 3As, and NVIDIA, which is Meta, Microsoft, Apple, Amazon, Alphabet, and NVIDIA, then it's going to be very hard to beat the S&P 500 because the S&P 500 is basically a measure of those 6 securities. The others are too small to make a difference. If you look at the others, they're canceling each other out. The smaller bubbles which rise are cancelled out by the smaller and bigger bubbles which have fallen. Okay, so it's very simple. You want to beat the S&P 500 if that's your obsession, though it doesn't put food on the table. Then you'll be going against the advice of Warren Buffett, who, following Benjamin Graham's book, The Intelligent Investor, said the S&P 500 and trying to beat it is like trying to say, I need to beat the Joneses. It makes you feel better, but it doesn't put food on your table. So you want to beat it? Several ways you can do it. Core, you can have an S&P 500 tracker, and then satellite, you just increase your share of holdings in Meta, Microsoft, Apple, Amazon, Alphabet, and NVIDIA. That would beat it. Second way to beat it, 2 times leveraged exchange traded fund on the S&P 500. After all, it goes up more often than it goes down. But remember, investing is risky and leverage is especially risky. You probably don't want to do it. So that's the second way in which you can relatively easily beat it. There you go. Okay. Does it make you feel better? Probably not, because surely it's not the S&P 500 you want to try and beat. What you actually want to do is the higher of a positive return, NASDAQ 100 or the S&P 500, whichever one of those 3 is the highest, surely is what you're trying to beat. So when people blindly say, well, can you beat the S&P index tracker? Well, why aren't you trying to beat the NASDAQ 100 then? It's even better performance. And why not an absolute return no matter what? I mean, what's the point of beating the S&P 500 the years in which it's down 20%? You could beat it by being down 19%. Great, you just found a new way to lose money. So let's be a bit smarter. Save this video and like and follow, share, comment for more, because there's going to be more great content out there for you. One last look at the bubbles, not me, these bubbles instead. There you go. Thanks very much. I look forward to hearing from you in the comment section.